Let's focus on certain earnings now, and let's start off with the mid-cap IT counter. Zensar has posted a 10% decline in profit and a 2% growth in the top line. Sandeep Kishore, MD and CEO at Zensar Technologies, joins us now. Good morning, Sandeep. Good to have you on the show. Let's start off with the earnings performance, and let's start off with the headline numbers itself. Your profit is down 9.8%. This time around, so the total income, however, has gone up by 2% odd. Take us through the key metrics in this quarter and what has pressurized the profit exactly this time around.
Sure, good to be talking with you. Our operating numbers on a sequential basis have actually been quite good. We grew 2% on constant currency quarter on quarter. We grew 1.8% both on revenue on the dollar terms. We expanded our gross margin by 3.7%. We expanded our EBITDA at 4.1%. So operating numbers on sequential basis have actually been quite good. Digital, which has been our big focus area, we've announced $40 million worth of new wins on digital just in quarter two, which is about 1/3 of the total wins which we've had. Profit after tax declined, particularly because of the currency impact. If you take the currency impact out, actually profit after tax also would have grown by about 40 basis points, but for the currency impact. So overall, we feel pretty good about the operating parameters within the company. Also, if I give you the next cut of numbers at the margin expansion, utilization, attrition control, they've all done actually quite well.
Right. Let's also speak about the focus of the company. Now, last time we spoke, you said the focus is on high value yielding businesses, and you want to reduce the focus on low yield non-core businesses. How is that progress going on as far as that strategy goes? And then we'll get into other operational metrics and the numbers there as well, Sanjeev.
Sure. So yes, and we are still executing quite well to that strategy. If you take a look at the business growth, which we have delivered in Q2, across our top 5, top 10, and top 20 accounts, all of them have shown exceptional growth. The top 5 now contributes about 39% of our business, top 10 about 49% of our business, and top 20 about 59% of the business. So the focus that we are putting on high growth account, particularly in the digital-led business, has actually been executing quite well. We also focused on hunting for the new business where we think we can add demonstrable value, particularly around the return on digital framework that we've launched, in which we actually go to market by delivering business impact through digital. So we think we are on the right track, and we've done actually quite well to execute on the strategy which we have shared earlier with you.
Right. Sandeep, let's speak about artificial intelligence as well as digital. I mean, going ahead, once obviously right now it's still brewing, but once it attains maturity as far as AI and digital concerned, your revenue per client overall for the industry is likely to become subdued, but there will be gains on margins that will be seen. So in an environment like this, companies, especially companies like yours, are expected to do more as far as operating profits are concerned and operational efficiencies. So in that regard, if you could give me certain numbers with regard to utilization levels, what kind of an improvement have you seen on a sequential basis or on a year-on-year basis as far as utilization levels are concerned? Maybe your on-site effort mix, any subcontracting rates, is there any moderation in the third party that you've seen in the costs there? And your days sales outstanding as well in terms of receivables. 3 or 4 metrics if you can share with us.
So I think that's a great question, and there are multiple aspects to that question. I think first is, let me touch upon, it truly is an inflection point for the industry. With machine learning, artificial intelligence, automation, bots, and we have developed several of our solutions which we have launched for our customers across the 3 core domains that we work in, which is manufacturing, retail and consumer, and financial services. That's the market segment which we are predominantly focused on. That's about 95% of our business. And we've launched several of these solutions exactly to address the point that you mentioned. Because it's about being relevant to the customer. It's about being digitally aligned to our customer success. And all of them plays in quite well to the strength and the capabilities that we are building it at Zensar. Operating metrics, our utilization has actually inched up. It's probably at an all-time high right now at 80.1%. We've gained significantly in moving more towards managed services. 260 basis points we improved on a sequential basis in our offshore-led businesses compared to on-site-led. And we are doing more and more managed services built around platforms and solutions today than what we've done in the past. And all of that actually lends itself quite well into the area which is the future of enterprises within our customers. So the investment that we are putting in, the operating matrices that we have, the focus that we have with our top tier customers, which are all in the Fortune 1000 and the Global 1000 range, have all been playing actually quite well to deliver business results, which we had committed to you last time as well.
Right. Sandeep, let's talk about the revenue growth, geography-wise split. US revenue has grown by 2%, Europe has shown an expansion of 3%, while Africa has grown by 4.1%. Now, obviously, the African continent remains an area of opportunity and a significant scope of growth going ahead from here on. But in terms of US and Europe, I mean, both our geographies, we are speaking at a time where it's rife with uncertainties, be it the political climate in the United States and what happens to client budgets post that. Possibly they'll be bunched up, there'll be a little bit of a delay. But any clarity or any commentary that you can give us as to what are the prospects going ahead? Because we've seen some tweaking or some attempts at tweaking of those visa norms, but nothing really has come out of it. And even in terms of Brexit, we keep talking about it, but nothing really is articulate or pronounced at this point. Both your views on these geographies?
Sure, fantastic. So I think if you take a look at US, Europe, and South Africa, which are our three core growth vector markets, all of them have grown at par with the company performance or more. US grew, as you said, 2% constant currency terms sequentially, Europe 3%, and South Africa over 4%. So we feel pretty good that we are focused on where the growth is. South Africa is actually a very critical and a very growth-oriented market for us. About 10% of our business now comes from South Africa, about 10% comes from Europe, and US still is a very dominant market segment for us. So the base is actually quite high for us. We need to be digitally relevant to our customer. That is exactly where we are putting all of our solution investment. That's where our return on digital framework plays in quite well. That's where the automation solutions, which we talked about, the bot solutions, aligned to our customer success actually makes it quite well. Uncertainty is typically there in the Horizon 1 area, where it has traditionally largely been a cost-led play. Our focus more and more is to be more towards the digital transformation, digital relevance to our customer. And that, I still think that we have tremendous growth opportunity ahead, for not just for us, but even for the whole industry as such.
Right. Sandeep, if you can also give us a business segment-wise split, because retail and consumer has done quite well on a sequential basis, around 10% of growth that has come through, but manufacturing has contracted. Take us through a segment-wise split as well.
Yeah, so you're right. Retail actually grew exceptionally well. Retail has grown 10% sequentially, predominantly led by our digital services, our commerce services, our omni-channel, and our customer 360. As you know, retail as a segment itself is going through massive transformation, and it is about omni-channel right now. It's not just about the store. And our solutions and our propositions which we have developed, ZBot solution plays in actually quite well. Our commerce solution and of course our whole customer 360, the click and collect and pick and pay, all of that solution actually goes in quite well with the retail and the consumer services. And we have been very thrilled with the performance of our retail and consumer team. Financial services, has seen some amount of softness. You mentioned earlier about Brexit. There has certainly been some delays in the client decision making. The financial matrices, the profit after tax actually had significant impact, predominantly on account of the currency issue. So it does have some impact. On a long-term basis, however, I still think that, at Zensar level, and I'm sure even at an industry level, these things should stabilize. But we will see some volatilities as in the near term on account of Brexit. Manufacturing, on the other hand, has some seasonality. The pipeline in manufacturing actually looks quite good. We've launched, several solutions on manufacturing, particularly built around IoT, which we demonstrated a couple of weeks ago in the Oracle Open World at San Francisco. So the pipeline looks quite good, and it should turn around. There's been some seasonality in Q2 on manufacturing, but overall it feels good.
Sure. We leave it at that, Sandeep. Pleasure speaking to you as always, and we look forward to engaging with you more frequently in future as well. Thanks for joining us. Let's move on now to a full perspective on the earnings season. Dhananjay Sinha, Head of Research, Economist and Strategist at Emkay Global Financial Services, joins us now. Good morning, Mr. Sinha. Good to have you on